Welcome to the Investor Fuel Real Estate Investing Show, where I interview the nation's top real estate entrepreneurs, industry leaders, and other amazing entrepreneurs to help educate and inspire you to take your business and your life to the next level. My goal is to add tremendous value to you during every single episode of this show. If you get value, I'd love it if you subscribe on your favorite podcast player, subscribe on YouTube, and my very favorite, please share this with your community so we can impact even more entrepreneurs. Let's start today's show. Hey, everybody, welcome back to the show. Today, I'm here with Arnie Abramson, a good old friend of mine. We haven't spoken in a long time. In fact, when I was recording the Flip Nerd podcast, when we started that back in 2012, Arnie was, I could go look it up. I don't know the numbers right now, but probably in the first 10 guests we had on there. Arnie really kind of has a niche carved out here that he's been focused on for a long time in Texas, and that is foreclosures and sheriff sales. And kind of on tap. It's going to sound weird that I say that's on tap, but I think Arnie is going to show you some stats of how to find some of the very best deals that not a lot of people are working anymore. And that's what we're going to talk about today. So Arnie, good to see you, my friend.
Well, thank you. Thank you so much. It's been a while, like you said.
It has been a while, yeah. Yeah. So it's kind of funny. You have you make friendships and you have connections, and I think because I've been podcasting for so long, of course, you're in Dallas, the DFW market generally, so we got to know each other pretty early on in my career. I started in 2008, and so you have these relationships out there, and truthfully, that's one of the reasons why I'm really leaning into the podcast right now. Is I have so many friendships, and it's easy to have years go by and not talk to anybody. And I really just turned the podcast into a way to catch up with old friends and make new friends and things like that. And it's like, hey, if we're going to chat, let's go ahead and record it in the process and make some content too.
Well, that's interesting you say that because very often we have new members come in and they ask me, what do you really like about this business? And I say, it's the people you meet because you have something in common with all the investors and you develop these relationships. Like, I used to be in Dallas physically and go to the clubs and all that. And I haven't talked to or been to some of these people in years, but like you and I, it's like we never left,
Yeah, that's
like it
right.
was yesterday. Those
That's right. That's
relationships are there. And that's a big part of what we do
right.
and what you do.
Yeah,
So.
absolutely. Absolutely. Well, I'm glad you're here. So I'm excited to talk about this. And I know you've got a unique angle on what you do here that I think people are going to find interesting. Before we kind of jump into that, you have a rich history. You've been doing this for a long time and probably many different ways. But just give us a brief overview of your background and history as a real estate investor.
Well, it started in 2001. It's when I moved to Dallas. And the very first, I went to a club meeting, and the speaker there was talking about the various types of ways you can invest in real estate. And one of the things he mentioned was tax sales. And I was kind of nodding in the back of the room and falling asleep. My wife gave me a little elbow and said, pay attention. And after it was over, we went over to talk to this guy, and he was a guest speaker from Houston. And we talked to him, and there was another guy standing there who had just moved to Dallas. And he said, and we talked to him a little bit. His name was Bud Brandstetter. And I think he's still out there doing this stuff, but he had done about 14 tax sales before he moved to Dallas, and he came here for a .com company, and he didn't have time, but he knew what to do. We had the time and didn't know what to do. So it was a perfect fit. We joined up with him and worked with him for 2 or 3 years and learned the tax sale business on that. And then we went out on our own because we wanted to expand it. And we went from there and started doing HUD foreclosures because that was new at the time. They had a big auction and we were prepared for it. They had 200 properties and they gave you 6 weeks notice. And we went, I had a HUD key. We went and looked at every property, my wife and I had. And we went to the auction. It was so crowded, you could barely get in. And we won one bid. But it was so successful, 90 days later, they had another one. We got 4 properties. And then 90 days later, they had another one. And Pat made a big mistake. She let me go without her. I bought 10 properties. Well, back then, you win the bid, you had 30 days to get the financing,
Wow.
so it was okay and to get whatever you need. And then we started doing VA foreclosures because they had financing built in, 10% down and all that. And so we did that for years and years. And I looked around one day, several years later, probably about the time we were talking, and I had an office of 10 employees. We were managing 300 properties, and we had interest in most of them. And I said, this is not where I wanted to go.
Yeah.
So we started getting out of it and going there and I said, I just want to do two things. I want to play more golf and I want to teach people about tax sales because that's something I really like.
Yeah.
So after a while, we finally did it, and I started teaching people about tax sales, and a few people, and then a few people more, and a few people more. And I realized no one was teaching people. No one in the state was teaching people about it.
Yeah.
So we started doing that, and we were going just to the Dallas and Fort Worth sales for years. And then about very few years ago, about the time right before Dallas went online with their sales, we noticed it was a lot of more people coming in to bid. And a lot of them were hedge funds. We knew that for a fact because one of them hired us to go bid for them, and we were doing it.
Yeah.
And the price, more competition, the higher the prices went, and the less great were the deals. So
Mhm.
finally, at one point, I said, "We're out of here. We're no longer going to do that. We're going to go to the smaller communities." And it's just it's gone crazy. We had a sale. What's today? Friday, 3 days ago, Tuesday. Always on the first Tuesday of the month.
Right.
And we went to 20. We were in 20 counties. Two of them got pulled, it just canceled at the last minute. So actively, we bid in 18 different counties, and won bids in 13 of them for our
Wow.
investors. We don't do it for ourselves, only for our investors.
You do it as a service now for other
We are the
investors.
service, right?
Yeah. Well, before we kind of dive too far into working foreclosures, and so there's a couple of undertones here is you've really kind of specialized in going in the kind of secondary and tertiary markets that are not as competitive. The hedge funds aren't there. You show up and there's like, it's not like a flea market, right? You kind of, and you've got some insights into these counties that a lot of people just don't. But before we kind of dive into that, talk a little bit about for those that might not know, you've got the tax sales, which I think your nickname used to. I don't know if you still go by the sheriff, but we used to call you the sheriff. I don't know where that came from, but I remember that because you really were a tax sale expert in Texas and still are. And I know you do a lot more foreclosure stuff. So just explain, a little bit, kind of high level, how the foreclosure sales work in Texas, and then a little bit about how the tax sale process works. It's unique here as well.
Well, there are so many different types of foreclosures, as you know, but the two
Right.
main ones that we concentrate on are the tax sales, and then we kind of label the others as something else, but because they're two or three different parts, but primarily they're the trustee sales where the mortgage companies are foreclosing.
Right.
So the two that we concentrate on, the tax sales are where people, those auctions are for people who don't make their house payments. The trustee sales are where people don't make their mortgage payments. Now, the prices today are such that everybody's got to have a mortgage. So there are more trustee sales coming than there used to be compared to the tax sales. Now,
Yeah.
the tax sales are very unique because they're put on by the taxing authorities. And there's some caveats with the tax sale. Uh, Usually the bidding starts with the amount they owe in taxes, and it goes up from there. Now, when you buy the property at the tax sale, you get immediate ownership, but the old owner has 2 years in which he can buy it back. He can redeem it. Now, this is Texas. All the states are different on how they handle that. But in Texas, they have 2 years in which they can redeem the property. And if they do, they have to pay you back what you paid for it, plus 25% if it's in the first year. If it's in the second year, it's 50%.
Mhm.
Now, that sounds so attractive, and a lot of people come in for that, but the bottom line is less than 10% of them get redeemed.
Right.
And in reality, probably today, less than 5%. Because look, if they don't have the $12,000 they owe in back tax, in their payments, and you buy it for 60,000, and it's a $200,000 property, where are they going to come up with 60 if they couldn't come up with 12?
Right. Yeah.
So now a lot of people get this completely wrong. That there's a problem in Texas that the title insurance is not available for 2 years if you buy it at the tax sale. Most people think that has to do with redemption. It has nothing to do with redemption.
Mm.
But because they both have 2 year, 2 year, everybody thinks that's what it is. It really isn't. It has nothing to do with it. You are the owner when you buy it at the tax sale. You can evict whoever's there. You can do whatever you want. It's your property. And a lot of people think, oh, you got to wait 2 years before you can do anything. Not true. Now, if you
Right.
do improvements, if you do any work on the property, you need to make sure that it's in compliance with what the code says. And the code says, okay, you can do anything you need to do the property as long as it is to maintain, preserve, and safekeep the property. And that means that if you take out the countertop and replace it with ebony or something, that's not to maintain, preserve, and safekeep the property. They would not have to reimburse you for that. But
Yeah.
if you got a hole in the roof or something, the carpet's worn out, all that stuff that you can prove that it's to maintain, preserve, and safekeep, they have to pay you that plus 25% as well.
Mhm.
Now, so that's one of the things.
So most people that buy these, they tend to try to keep it simple, don't make a lot of improvements, just like maintain the property so that it's operating.
Well, I
And they
used to
just
tell
generally rent it out for a couple of years. And then after that period's over, then you can do whatever you want with it. Is that typically what most people are doing?
Well, I used to tell people, look, to really be the proper type of investor, you need to buy it and assume you're going to have to keep it for 2 years. So you fix it up, you rent it out for 2 years, and 2 years later, it's probably appreciated. You can increase the rent or you can sell it then,
Right.
generally. Now,
Yeah.
there are some people who will buy it without the title insurance because when you buy it at the tax sale, it wipes out all liens except for government liens. So, you can do a little research. If there's no government liens on it, okay, we'll buy it,
Right.
So
Yeah.
there are all sorts of things. Now, the auctions, you need to know about the auctions. They're all the same time. Most of them are 10 o'clock in the morning on the first Tuesday of the month. Some are in the afternoon, but most of them in the morning. And by the way, there are two exceptions to the first Tuesday of the month. If it's on New Year's Day or 4th of July, it's going to be the next day, a Wednesday. Other than that, it's always going to be on a Tuesday.
Yeah.
And it's an auction. Now, some of them have gone online now. And you want to hear something really crazy? Some of them are online and in person at the same time.
Oh, well.
That's weird.
Yeah.
But
So Arnie, let me ask you. So, you and I were talking briefly up front, and I was just I had this general belief that foreclosure activity is down, and partly because people have a lot of, I think compared to 2008, 9, 10 in that range, more equity in their house. But one of the things that you said, which immediately I'm like that makes sense, is housing is becoming less affordable because taxes are going up, insurance is going up. So yeah, maybe people have equity in their house but the affordability is going down, really nationwide, but in Texas for sure. I mean, appreciation's been massive here, and that's a good thing, from I guess from a wealth building standpoint. But that also means because taxes are so high in Texas, typically almost like 3% of the value of a property, that as your house keeps appreciating, your taxes just keep going up, 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 and it's squeezing a lot of people, right?
Absolutely.
Yeah.
That is true. Yep.
Yep. Yep.
And on top of that, you know, you've got the trustee sales with the mortgage companies, because most people who have a mortgage are going to have it escrowed with the mortgage company, right? They
Right.
have their taxes escrowed. Not everybody. So you've got these two different uh, places where they're for different reasons. A lot of people do not want to escrow it with it. They'll say, "I'll pay the taxes myself," and that's one market. But the trustee sales entirely different. First of all, there's a big contrast on the tax sales. Who's not getting the money? The counties. So the counties want to sell it. They want to put it out there and sell it. The trustee sales, the exact opposite. There was a house for 150,000. They loaned 75, 80% of it 5 years ago. It's now worth 450,000. They don't want to sell it at an auction when somebody's going to buy it. They want to keep it.
Mhm.
So they're going to make it much harder to find those sales.
Right.
By law, the tax sales, they have to put them out there. They have to announce it. And we know where to go. There are three big law firms that do that. And they go to their websites. They put them out 20 days before the sale. They have to post it. They put them on their bulletin boards is really what the law says on the 20th day. But most of them also post them online. The trustee sales, they make it difficult to find.
Mm.
They don't want to sell them.
Yeah.
And sometimes they'll do them simultaneous because they're at the same place at the same times that the tax sales.
Yeah.
So they'll do them at the same time. So most people don't know what's going on.
Yeah. Would you say, Arnie, that over the last in the time you've been doing this, even certainly the last 5 to 10 years, that the counties are more aggressive with trying to push stuff to a sale to get that revenue because they just want to get paid back, right? To get that revenue in quicker. Because I do recall we've talked before. I've been to a few sheriff sales a long time ago, and it seems like there's houses that are like they're like 10 years behind on taxes. And I'm like, why would they wait that long? Do you feel like they're more aggressive now? Because I think honestly, a lot of counties are broke too. They're looking for revenue and then it's gotten it feels like they've gotten a little more sophisticated and they're a little more timely with maybe doing things like this.
Well, they are, but here's what most people don't know is on the tax sale, before they can even list it to be sold, they have to go and notify every person who has an equitable interest in that property and give them an opportunity to pay. Now, here's what happens. Somebody dies and they can't find all the heirs. They've got to go find every one of them. And sometimes that takes weeks, months, years before they find them.
Wow.
And that's really the big reason, because if they don't do that, then the sale can get voided.
Yeah. Yeah.
So,
Okay. So let's talk about so you were working the main DFW market, which is like creeping up real fast here on 8 million people now. Big, four main counties, and huge population, lots of activity, but it was bringing in a lot of more sophisticated investors or quite frankly unsophisticated investors that are paying too much, uh, the hedge funds and the institutional buyers.
right.
And you said, hey, we're just going to go focus on the kind of outlying counties and some of the secondary and tertiary markets. And you feel like that's created a lot of opportunity for you and your clients because they're just not worked as hard as the others. Is that fair?
Well, I heard the other day somebody called me and said, do you think it's true that in Dallas, the average price at the tax sale is full retail value?" I said, "I don't know. I don't do them anymore, but I would not be surprised."
Yeah.
All I can tell you is that for last month, for example, we bought properties in 13 different counties, and the average price is less than 50% of assessed value
Hmm.
in the smaller counties, and they're growing like crazy.
Right.
Salina, for example, as we were talking about earlier, fastest growing town or city in the United States last year. They went from 3,000 people in the year 2000. Want to guess what they have now? 51,000.
Wow, almost 10x in
But in the
25 years.
last 2 years, they went from 34,000 to 51 in the last 2 years.
Yeah. Well,
So,
there's so much development for those that are that's definitely squarely in the path of growth north of Dallas. And just to get people perspective, south of that is Prosper, south of that is Frisco, south of that is Plano. And that same thing happened to Plano and Frisco and Prosper, and it just keeps kind of
of
going
course,
north along the way there. Yeah.
of course.
Yeah.
Well, Forney, I've got five little towns that I check: Anna, Forney, Hutto, Princeton, and Salina, and
Yeah.
every one of them in the last 2 years. Some of them went up 50% in the last 2 years.
Yeah.
People, there are a lot of people moving out of the big cities into what used to be the country, but these little country places are now growing and they're becoming like a suburb or a rhubarb, as I call them,
Yeah.
rural suburb.
Yeah.
And like Princeton, just 7 miles east of McKinney. Now McKinney, when I lived in Dallas 20 years ago, 25 years, McKinney was in the country. Now it's
Right.
out of Dallas, really.
Right. Yeah.
And it's 7 hours, I mean 7 miles from Princeton. That went from and in 2020 had 17,000 people, now has 31,000.
Yeah.
I mean,
Yeah. So, Arnie, for people that are listening now, in terms of opportunity to buy houses this way, and I know you help a bunch of clients do this. So, is this there's probably an element of some people that might live in those counties or somewhere, and they're like, yeah, I like to get rentals here. There's probably some people that are out of state, and they're like, I'm agnostic to where we get rentals at, right? Which then, of course, the challenge is getting them professionally managed in an outlying area, which has some complications itself, I imagine. So, who's the avatar of the person that's kind of buying, or who's a couple of the avatars of people that are buying um, at the foreclosure and tax sales and buying in outlying areas? Like who's the avatar
oh,
doing that?
we are the ones buying. We cover the whole state, and we're going to go and bid on behalf of people who can't be in more than one place at a time.
Right.
And so we
But the
will do.
ultimate buyer, like who is that? What does that person look like?
I'm sorry.
The avatar of the person that wants to buy houses there that's using you guys to bid on their behalf. Like who
You
is
know,
that?
I get asked questions like that about all the trust sales, all of these sales all the time, and I have to say this: there's no such thing as an average.
Mm.
Because they say, what's the average price? What's the average property? It could be a vacant lot. It could be 140 acres. It can be a house that's torn up. It can be occupied. And the same thing. There's no such thing as an average, but we have investors that are big players that want to buy a lot. And we also have a brand new investor that comes in and we will educate them. We have a whole training program and we can teach people exactly how to do it. And if they would like, we'll even get them to join us. And while they're doing it for themselves, they go out to look at in a county. Well, here, look at this one and these other three while you're there, and then we can market that and we split the fees with them. So that's it. That's kind of how we do that is
Yeah.
that they can learn and earn at the same time.
Yeah. And for folks that are buying these, I'm sure this differs from person to person, but if they're generally going to keep it as a rental for 2 years, obviously one of the most important things in a rental portfolio is having good property management. And that's hard, just to be frank, even in town, in big in bigger areas, but in more rural areas, that takes a special kind of property manager that can manage across
Yes,
lots of counties and manage more of that rural type property sometimes. So
we will
who
do
is
that.
man
We will
who's
find
typically
them.
managing?
We find them property managers
Okay. Yeah.
if they wish. We will put them in. We manage the managers for them. We're not going to manage the property, and that's why we'll send you the business because you've got a bunch of property managers available. So we like people like you.
Yeah. Yeah. So Arnie, I know you share a lot of you provide a lot of training and stuff. And for me, I tell you, there's two different times that I've been to the auction in Dallas County. Well, at least twice. But before we even started in real estate investing, we were trying to get started. We didn't know, so we went to the auction because we heard that that's where you can get houses at. And we got some cashier's checks, big checks, because you used to have to pay on the spot at least. Had no idea what we were doing. And it just, we realized we were in over our head. And that was in 2000. Honestly, that's 2008, early 2008. And part of it is like, like you said, there's information online. I'm sure there's more information online today than there was back then, but there's not a lot of places to go learn for how to do this, right? I know you kind of educate people. Do you have a link or something you can share with us for folks to
Yeah,
learn how to
we have
connect
a
with you and your
website.
team?
Yeah, we have a website. It's just like my email address. It's txtaxsales.com. txtaxsales.com.
That's good. Yeah, where were you in 2008 when I needed you?
I was here.
Well, I know you were here, but the educate, and
We're
you
probably
probably
still
would
doing
educate.
Dallas. We're probably still doing Dallas then.
Yeah,
And,
yeah, awesome. Well, we're going to
that's
add that link down below for folks to kind of go learn more about it. So,
sure. And
um,
listen, I love phone calls. I love questions. So
yeah,
I'd like to give out my phone number if that's acceptable.
yeah, go ahead, go ahead. Everybody get your pen ready.
214-869-7188. And that's direct to me. That's no, if I don't answer, that means I'm on the other phone. I'll call you back. Just leave a message.
Yeah, yeah, great. Well, Arnie, thanks for sharing some great info with us today.
Well, I thank you for having me. And it's so exciting because, our whole philosophy is we want everybody to win. We
Yeah.
want our investors to win. We want to win. And wherever possible, we want the people who have that house win. We help them sometimes. A lot of times we can make a deal and our investors will buy the property and owner finance it back for them.
Oh, wow. Yeah.
So there are a lot of different ways to do this. And
Yeah.
it's so much fun because
Yeah.
when everybody wins, everybody feels good.
Yeah, absolutely. Well, thanks for doing what you do, Arnie. I know you've been doing it for a long time, and I appreciate those that have committed to helping other people and being a service provider and knowledge provider and all that. Because I know sometimes it's a thankless business. Sometimes you lay in bed, and you're like, why do I do all this? Or what am I doing this all for? And you said you shifted your model I know you had a big management company and all these things. And I was talking to somebody else recently on another podcast, and it was just after you've been in this business. I mean, we all got in this business to have financial freedom and time freedom, right? And I think even though there's a number of folks that get that financial freedom, they don't necessarily get that time freedom. And you start to realize I'm doing stuff that I don't really want to do or that I don't love. And there's this thing that happens kind of in the back half of your career, usually, that's like, well, I really just want to rein things in and focus on I've done all this stuff, and there's a bunch of stuff I don't want to do anymore. So how do I focus on what I enjoy doing? And I think everybody listening, just know that that's coming. Like, you should be constantly pruning the stuff that you don't want to do, because there's a lot of ways to make money in real estate we just talked about today, and make sure you're focused on the stuff that you do want to do.
I couldn't have said it better.
Yeah. Awesome. Awesome. Well, thanks again, Arnie. And everybody, I hope you got some great insights from today. Go check out Arnie's website, txtaxsales.com, and you can learn more about how you really kind of get educated on buying properties at the foreclosure auction or the tax sales. It's unique in Texas, and I know that's what Arnie focuses on, and he helps people do it too. So if you get a chance, reach out to him and say hi. Appreciate you all. We'll see you on the next show. Thanks for joining us for today's show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing on your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. You can also check out the show's notes for access to free resources, how to get access to world-class lead generation, and even how to work with me directly one-on-one. Don't forget to subscribe so you never miss another episode. See you on the next show.